All right. Can you see me? That was strange. Okay, cool. Sorry about that. The Some of my software decided it was going to give me a new version right as I started up, and then everything just crashed. So that was beautiful. So just pulling up my screens. Welcome to the show. Thanks everybody. I'm glad you're doing okay. It's definitely been a trying week. But we need to find ways to persevere. There's opportunity out there. I went into one of my side jobs and the big boss was there, and everybody was grumbling about their 401ks. And the boss, who prides himself on knowing everything about everything, he said, "Oh, don't worry. Dave's fine. Traders love volatility in the market. This is what they live for." And so I said, "Yeah, this is what we live for." So anyway, we need to figure out a way to be profitable in this crazy environment. And the one thing that I've been doing that has been successful was to pick my favorite index and to buy and sell on these movements up and down in the market on a small scale to take advantage of moves. So it's almost, and somebody was talking about this online earlier in the week, it's almost like if stuff has been fluctuating so much that you could either buy or sell, and eventually you're going to be able to be profitable on that trade because stuff's moving around up and down so much. So for me, the thing that has worked is I've been trading the T triple Qs, and I'm coming on to VIX stuff very soon. But just to talk about this for a second, I've been trading the T triple Qs and have been able to scalp a few times just by when we have a big down day, buy a little, and then when we have a big update, sell it back out again. I'm just trying to correct my screens here and get them working again as this seemed to want to update. I don't like these computers where it decides for you when it's going to update. You should be able to decide for your computer when you want stuff to happen. Zero hedge. Okay, so let me just talk about zero hedge for a second, as you're talking about in the comments. I believe zero hedge has some value. They've had some interesting articles. They have broken some major news stories. If you don't know about zero hedge, they were banned from Twitter about a month ago. My problem with zero hedge, which happened about 2 years ago or maybe a year and a half ago, was just that I felt it was pushing a very partisan agenda, that being the conservative side of things, and thus I wasn't all that interested in it. Also, it had a couple articles to deal with, like the 50-cent trader and stuff, that were a little bit misinformed. However, they do have some interesting stuff, and Edward, our moderator, posted an article to me that was very interesting in our private conversations on Twitter. Let's see if I can get that article to post in the chat here for you. But, I think people should get their news from a variety of sources. If you are a liberal, then don't just stick to liberal sources. If you're conservative, don't just stick to conservative sources. You need to cross the aisle and find stuff from different sources. Don't isolate yourself in a bubble of just people that have one viewpoint. That's a very limiting thing. And, we should all strive to be intellectuals and learn about stuff outside of your own bubble. At least that's my perception of things. All right, let me see if I can. This was the article that. So it's harder to get zero hedge now because, like I said, they were banned from Twitter. But the thing I look at a lot is a Drudge Report, which is granted a conservative site. However, it's a news aggregator that gives information from a variety of sources. So here's Drudge Report. I'm more of a liberal than a conservative politically, but regardless, I try to get news from a variety of sources to get a full picture of things. As traders, we're agnostic. We're looking to make a dollar, so it doesn't matter where that comes from for us. The other thing that I wanted to pick up on was another thing that Edward had brought to my attention, which was this post from Trading Volatility. And he's been on the program before for interviews, that being Jay Wahlberg, and I will post a link to this. But actually, I'm just going to put it on the screen right now. And this is a chart that is showing how back in 2012, we saw a period of us being in backwardation and VXX just being pushed higher and higher and higher, which is similar to what we've seen now. But you'll notice on this chart, this lasted for like 6 months of an up move. But the other thing to notice about this chart is in the end, stuff, of course, went back down again. So the question is does this situation extend for a longer period of time than usual? And so far it has. As traders, what we're trying to do is we're trying to do high probability trades, and we're putting the odds in our favor. However, the odds could be 99% in your favor, but you could still lose because of that rare time when the odds-on thing doesn't happen, and the less likely thing happens. And that's kind of what's been happening for the last couple weeks. Usually the VIX does not continue to stay elevated once it's spiked. Usually it goes right back down. So if we look back in the history here of the VIX, and we can just go to that 5-year chart once again, we'll see that most of the time when we get a big spike, it only lasts for like a day. Let me see if I can get this time frame out farther. Let's go to like a 10-year, see what that looks like. All right, so you can see these spikes, usually it just lasts very briefly. Now, in 2012, that's the period they're talking about here. If we move back farther in time, you can see it staying elevated. But most of these spikes just last for a brief period of time. And it's pretty, I guess if you go back to 2010, you can see this happening. But it is definitely historic and very rare to get the situation that we have had. Now, if you go on social media, you're going to hear people saying like, oh, I knew this was going to happen. You're an idiot for not getting long the VIX, when it was 40 and et cetera, et cetera. And, that's not the majority of people. The majority of people are long the market and have gotten hurt in this whole thing. But you can see here we've got the up move, and then it starts to recede, and then boom, we make a new high. Now, what's also interesting is that this new high in the VIX does not correspond with a new low in the E-minis or in the indices. We haven't broken that initial low as of yet. Now, that could certainly be in our future that we break that low, but this low in the E-minis, 28.53, we haven't broken that yet. We still have higher lows when we look at this chart here, and that is sort of a positive thing. But it's possible that we go below this. In my estimation, this stuff could sell off to a certain point where just PE ratios are to a point where it just doesn't make sense to sell off anymore. What do I mean by that? Well, PE ratios are a measure of evaluating the worth of companies based on their earnings. Their earnings related to their price, and during the .com bubbles, when PE ratios get over significantly over 20 to like 22, 24, that is a measure in some people's minds of the market being overvalued, and it really depends on which sector of the market you're talking about. Technology would have higher PE ratios than something like utilities or something. But when PE ratios get lower to, like, let's say, heading down from 20 towards 10, it becomes a certain area where stuff is undervalued. And most people who see this market possibly going lower see it getting down to a certain area where it's just bargain basement prices and people not really wanting to sell past that area. Now, we don't know what the market will do, but certainly the VIX is at a very, very elevated level right now of major fear. I was talking with a buddy who had been through the 87 crash and the 2008, and was saying that it feels worse than 2008 or 2000 to 2001, and feels more like the 87 crash at this point. We have seen, as we said, the VIX make new highs, even with the indices not making new lows. And the other thing we've seen is the term structure really start to reach up towards the VIX. Remember, during that first sell-off, we had the VIX move way higher, and the futures just didn't follow it. They just decided to stay lower. The futures stayed below 30, and it was just it appeared to be a bet by the people making markets and futures that spike was not going to stay up there for a while. However, during this new high in the VIX, we've seen the futures rush up to meet the actual VIX, and that important distance between the spot VIX and the futures has been maintained to some extent. So right now, if we look quickly at the VIX versus the futures, the price of the futures has stayed pretty close to the VIX. It didn't get up to there was a 15-point spread at one point between the VIX spot price and the front future. Right now, VIX showing 41.94 and the front month future 36. So, pretty much a 5-point spread. It did get up to over 8 points on Friday. However, 8 points is much better than 15. And the fact that these VIX futures are moving up, I like the fact that this spread is narrowing. I would love to see the back month futures get up really high so that once things kind of calm down, we can go into a sharp contango again. And so that is something that I'm watching very closely. People are pretty harsh out there. On Friday, I had hecklers. I posted about my position, saying something I was doing to my positions, and a bunch of people come out of the woodwork saying to me, like, who cares what you're doing? Who is this idiot? Blah, blah, blah. New people on StockTwits who were just pretty harsh. And I think that speaks to the fact that a lot of people have lost a lot of money and don't have a lot of patience. But I try to stay positive with people, and you kind of have to just shake that stuff off when you're gonna put it out there on social media, because of course there's going to be hecklers and otherwise out there. I think even if we look at a scenario like that 2011 scenario where we have a situation where this stays in a backwardation state for a while, we can still look to putting a short on that's out far in time. And out far in time might mean out past the election. What if we keep, if you put a short on that's out past the election, that gives us months and months and months for this stuff to settle down, and gives us time for this stuff to work itself out. Now, I currently have a pretty aggressive short on that's only a month out, but that stuff is risky, and close shorts that are expiring soon, those are the ones that have really, really gotten burnt in the last couple weeks, and those are the sources of a lot of losses. I know I've taken a bunch of flack for not showing my P&L in the last couple sessions, and that actually happened right after somebody was criticizing me, saying, "Oh, this guy only has a $5,000 account. Why should we listen to him?" I had started showing my P&L for about 6 months, and people didn't seem to be really following it that much, and I don't know. It's a two-edged sword, I like to be transparent and stuff, but then, somebody complains about something else. So I'm just going to stick to what I want to do, and hopefully people are happy with that. All right, so let's go. Let me look at the chat here and pull it up here and see what we've got going on. 87 crash wasn't even born yet. Yeah, I was not trading during the 87 crash. I started trading in 1994. So I went through the dot-com bubble in 2000 to 2001, and that was a I'd rather speak about stuff that I was involved in. And it was a really bad situation in that stuff just kept going down. Let's see if I can pull up a chart from that area here. Stuff just kept going down like every day, and it would just slowly move lower. And what happened is that all our customers went away. And so there was no way to make money back because if there's nobody trading anything, then what do? You're just kind of waiting around for something to happen, and nothing happened. So that was pretty brutal. Let me see if I can get this up here. Let's see. Time frame, 3 years. I'm not sure why am I doing this wrong? Anyways, 2000 to 2001, stuff went way down. And what happened was a lot of the retail paper dried up, and there was nobody trading anything. And so you're kind of stuck with stuff. Now, we cannot stay. I know I've been saying this, and it's gone against me, but we cannot stay up at this volatility level for a very long time. It's not sustainable. And I know you hear people saying, let's buy TVIX, it's going to 400, blah, blah, blah. And, it's possible that sort of thing could happen, but it's not going to stay there, and stuff is going to come back down. So don't lose your heads. The world is not going to end, and stuff is going to come back into line. I don't know when it will happen. It could be this week. It could be soon, but hang in there. What you want to do is you want to survive this process and still have money in your account to keep trading and moving forward. That's the key here. You're going to look back at this and remember this as a very unique period in history, and you want to be able to say that you survived to make it through, because there will be icing on the cake as this stuff recedes. So the key is, whatever your own personal financial situation is, you need to manage it as best you can to keep it going for yourself. And I don't know what your situation is. There's always going to be people bigger than you and always going to be people smaller than you. But you just need to worry about your own situation and manage that one as best you can. All right, so let's take a look at the VIX action once again and what we have to look forward to. We know that the futures are going to reopen at 6 o'clock today, and we can anticipate, more up and down craziness. We'll see if we're able to take out that low from last week or not. It definitely was an amazing thing to see volatility explode on the way down again last week. That was a shocker, a real shocker for me, seeing how high volatility got, because the VIX was signaling to us and was kind of an indicator last week of things to come, because even when we got up, even just down a little bit in this chart here, the volatility was exploding, and there was a bid on the futures, and TVIX and VXX were making new highs during this crisis. Obviously, these products have been at these areas before, but they were making new highs, and the VIX did tell us of things to come. It was an indicator here. However, the damage to these indices, with the VIX doing if you just looked at the VIX and you asked somebody, what do you think the chart of the E-minis looks like, you would think that the E-minis was down to like 2,700 or something, because volatility was just exploding. And we haven't even taken out the first lows yet, and volatility has just exploded. So if somebody had said to me, if I couldn't see the indices and all I could see was the VIX last week, I would think that we were like way lower. It's very hard to trade this stuff, and I would be very careful about buying premium in any shape or form. It's a hot potato. Somebody had asked me what strikes I had put on in VXX, and I'm kind of questioning my decisions at this time, but the strikes that I bought was I bought the April 22-25 put spread, and let's see what I paid for it here. I think I paid like 89 cents, something like that, for it. And so, once again, the 25-22 put spread. So, if we come off of this just a little bit in the next month, then we should cruise back down to 20 again. Before that, I had on the March I'm sorry, I had on the May 2017 put spread, and that was getting almost just so far away from being possible that I wanted to kind of roll stuff up a little bit. But yeah, it certainly was an ugly week for me. And I'm not going to, I can't deny that. I definitely lost money last week. So if you lost money, you're not alone. If you made money, then congratulations. All right, let's see what we've got in chat here. Are pricings for options still fair? That's a good question. It's very hard to tell how to price this stuff right now, as we have just seen huge move to the upside. Now, what goes up has to come down. So this stuff has to move lower at some point. The key to it all is figuring out when it will move lower. It has to move lower. We just have to figure out when that's going to happen. And so my advice would be to give yourself as much time as possible. If you can move out to June or July, then that would be great. And my other advice to you would be to leave some money in cash. So if the situation gets worse, you can jump on it. As we start to move lower, you could always add to your position, but always give yourself room to if things go against you. Because once again, we just want to we want to survive this, folks. This is, you can go back to all the ways we make money with the VIX, shorting stuff once stuff calms down. But in the meantime, we need to survive this situation. Is June, July really safe? That's a good question. Obviously, we have that risk in October, November with the election. We don't know if June or July are really safe. We are in the business of taking risks. So the question is, what sort of risk do you want to take? I've been very beat up by losing money in the last couple of weeks. So my risk tolerance is not so great. You almost want to just throw in the towel. However, for me personally, since I've been short this stuff the whole way up, the last thing I want to do is either get long stuff here or have no position, so that if it turns out that next week is the week that stuff goes back down again, all of a sudden stuff goes all the way back down and I'm left with my losses. Since I've had a short delta all the way up, I want to make sure that I have somehow, some way, a short delta somewhere, so that as things go back down, I can recoup some stuff. Some of the calendar stuff I was talking about still is applicable. You do want to be careful of your theta. Of course, theta being your risk for a move in volatility. When you're trading options that are farther out in time, they have higher thetas attached to them. So if you're doing something where you're buying an option farther out in time, you want to be very careful to your sensitivity to theta. Now, when you look at the Greeks in your software, it's going to show theta, and that's going to represent the money you will make or lose for a 1-point move in volatility. And when we've got volatility in the options here, and when you think about theta, you want to look at the options in the actual product you're trading. So if you're trading VXX, you want to look at what is the volatility in actual, not in the VIX, but in actual VXX in the months you're trading. So if you look to the right of my screen here, you can see different months and the different volatilities. So, and also if you're in Thinkorswim, you can go down and look at this option statistics, and this is going to give you an idea of what the averages are for VXX and volatility. So it's showing here 52-week low, and sometimes these are not accurate, so you want to be careful with this stuff. But it's showing 52-week low of a 50 vol and high of 112 vol. Now that obviously is not accurate, because we see higher than 112 vol just looking at the charts here on the side. But we know that the earlier months here, the closer months, are not as sensitive to Vega. It's these farther ones that you have to be really careful about. But if you've got, for example, this May 105, if this goes down to like 80, then you're looking at an over a 20-point move down in volatility. So if you have a Vega number that's high and this drops by 20 points, that's going to go against you. A lot of times, if you have a calendar spread on, for example, your Vega in the back months is going to be offset by the month you sold in the front months. And the absolute way to check it out is just to see what the actual premium is you're paying. If you're paying a very cheap premium in the end, then you know that you can't get hurt too much on a Vega crush because they're going to offset themselves to a big extent. So, but it does get confusing at times. And my advice is the same as it's always been: is I like to use spreads, where I'm buying one option and selling another. And, to a certain extent, this has really saved me on the upside, because if I was not using spreads, if I was just doing something like shorting TVIX, TVIX, it looked like a good sale a couple weeks ago was selling TVIX at 60 or 70, and it's tripled in value since then. But if I had a spread on, the most I could lose is the amount of my spread. Now, it's a different trade. Of course, if you sell TVIX here and it goes lower and lower, then you can make money all the way down, whereas a spread can only make the maximum amount of the difference between the strikes. So it's kind of a two-edged sword as far as shorting one of these products versus putting a spread on. Putting a spread on, you have limited losses, but you have a limited amount of money you can make. Obviously, shorting a stock, you have a limited amount of money you can make down to zero, but you could potentially make more money if it continued to move lower. However, if it spikes really high, then you're going to have to cover that. Now, when we were talking about risk management a few weeks ago, we were saying, protect yourself for a 100% or 200% move. Well, TVIX has made more than 100% or 200% move in this situation right here. This is an extreme situation, but this is why we talk about risk management and managing it for the extremes, because it tends to happen that the extremes don't happen until you yourself actually put a trade on, and then all the extremes happen against you. That's just the way trading works. So you need to cover yourself all the time. Do you think we really need to do a lower double bottom test? When people talk about stuff like we have to fill the gap, or this has to happen because of technical analysis stuff, I feel that is folklore. Mark W. Certainly stuff can move lower, but we don't have to do anything. When you talk about technical analysis and you say, well, the charts, we gapped up, so we have to do this before we can go higher. Technical analysis becomes a self-fulfilling prophecy when, like, if most people that are trading a product are using technical analysis, then it starts to fulfill itself more and more. And that happens certainly in products like Forex more than it happens in these indices. And I don't think it's a foregone conclusion that we have to do anything. What concerns me, though, as far as the movement in the indices, is that we haven't given back that much ground, really. We haven't had a 50% down move in the market, for example. If we go to the E-minis and we back stuff out, I love to back stuff out to get better perspective. And if we back stuff out to a 3-year chart, we can see, yeah, it's too bad that we're down here, but we're still higher than we were in 2018. We're still higher than we were actually in 2019. So, we've given up a year, but boo-hoo. In all time, giving up a year is not that big of a deal. People who have been investing for 20 years still have most of their fortune intact, right? If you've been putting into your 401k for the last 20 years, then yeah, you gave back, the last few months, but you still have all those other years worth of gains intact. So in a way, that to me means that, like, some people haven't felt all that much pain yet. Most people who've been investing for a long time haven't felt super amount of pain. If they're just buy and hold investors, which a lot of the world is, they've lost the cream off the top for the last year, but all that stuff before is still intact. The market is still pretty close to 3,000, and 3,000 was a goal for a really long time. So in that sense, we could have a lot more to fall, and it hasn't been that bad as of yet. So, and I'm not, tempting the market to move lower. I'm just trying to put things in perspective for you here. I think we just have to, stay positive. We know that financial markets are ahead of everything else. So as soon as there's a feeling that this virus has some sort of answers and that we have more clarity on it, the markets will recover ahead of everything else. It's scary out there when you read the news headlines. I grew up in Milan in Italy, and it is a ghost town there. And they've locked down a lot of Italy. Let's look at the headlines from Drudge Report here. I posted a view of Milan a couple days ago, but look at this stuff. I mean, there's the Duomo, Piazza del Duomo. It's like a ghost town, and it says it wants me to pay something. It says the Duomo Square in Milan Sunday. Italy locked down 17 million people in northern Italy, including Milan, in an effort to stop the spread. And so this is all very scary. And I'm recovering a little bit from my illness, but I was thinking, I don't feel good. I definitely have the virus. But this is all very scary. And, sometimes we lose perspective, and you'll hear people saying like, oh, I hope the market tanks because I'm short right now. There's more important things than making money in the market. And this stuff is all very scary. So, and this other thing, this news story that says like the U.S. has only tested less than 2,000 people, that seems very scary to me as well. I'll be happier when I see there's more of a handle on all of this stuff and they start to work on it. Because it seems like it's going to get worse before it gets better here. So it's very scary out there. In the meantime, if we stay small and we still have some of our funds intact, we can take advantage. Remember, there's those trades that come out where you're at the right place at the right time, and you've got cash there to do the trade, and we want to keep liquid enough so that we are in the right situation for those opportunities when they come. So I know it's been a tough couple weeks. For those of you that have made money, congratulations. For the rest of us like me who have lost money, it's been scary out there, and it's hard, it's hard to keep perspective. There's so many people online that are coming out and saying stuff like, I just bought 5,000 TVIX paying, 185. It's definitely going to 400. You're an idiot to sell vol here. I mean, we've got to stay and keep stuff in perspective here. The VIX futures above 30 is a historic sale. And if we can just maintain long enough, or if you can stay on the sidelines until stuff starts to head back down, then we can stay in the game and make money and come out of this thing in one piece. We're lucky that we're not just the average person on the sidelines who has a 401k and who only thinks the way to make money is to be long the market, and anytime the market goes down, you automatically lose money. That doesn't have to be the case. It is the case for a lot of us shorting volatility just because of the strategy we've had on. But when someone tries to convince you like, oh no, the world's going to turn upside down and now UVXY and TVIX are going to go up from now on, and it's just going to go higher and higher and higher. I know where people get that mentality. They get it from trading stocks, but it's just mathematically it can't happen because we can't stay in backwardation for too long of a time. Otherwise, the markets will go to below zero. And once we turn back into contango, this stuff has to decay, even if it's decaying from a high point. So hang in there and keep the faith. I can't be here for the open tonight, but we'll see what happens moving forward. It seemed like things were kind of calming down a little bit on the close on Friday, but we don't know what will happen from here. These headlines spook people and stuff bounces all over the place, but I hope you guys can stay in the game and keep it going long enough for the ship to right itself a little bit, because opportunities are out there. I'm pretty hesitant to be buying equities right now just because of that scenario I pointed at where we haven't gone down really all that much from where we were. However, I am for short-term buying. I bought TQQ. I bought it paying 78 and sold it at 84. Then I paid, before that, actually, I paid 70, I think I paid 80 and 72, and then sold it at 83. And most recently, I bought it paying 80, and then I paid 75. And it's kind of, my cost basis right now is higher than the 76.84 that it's at right now, but I'm looking for my third round trip. So good luck to everybody. I know it's hard out there. Keep positive, and we will come through this together. Grocers, I'm not an expert on grocers at all, and I don't want to make an opinion that I know little about. So because I don't want to talk out my ass. All right. Thanks for watching, folks, and I will be seeing you early in the week. You know what's great is that I've had more viewers than ever in this recent period. I mean, unfortunately, it takes the market being in turmoil for that to happen, but that is good for the channel, and that's been great. So thank you for everybody for your support. Please consider joining a subscription. It's $1.99 a month. Compared with the money trading is not a lot, but it helps things out here. And I will see you early in the week where we will continue with our increased coverage of this stuff. I'm trying to do a video every day right now as we cover this situation. And we will look for a pull-off in the VIX to start a comeback here for us. And thank you to Edward and for your moderation, and I will see you again shortly. Thanks, folks.